Hello ladies and gentlemen, this is Lamar. I want to show you today about Fibonacci points and also discuss the Elliot wave. To me, those two terminologies go hand in hand. However, the Fibonacci use particular scientific data points or numbers of change of direction, so I should say, or numbers of resistance to actually identify what leg we may be on, okay? Where Elliot wave, you kind of eyeball it a little bit, right? But they both kind of point towards the same results, okay? So let's look at this. I have the Fibonacci deal here, but let me delete that real quick. A lot of people do things a little bit differently when it comes to the Fibonacci, and I'm not just one to say which way is the wrong way or the right way, but Fibonacci to me is best used on either a larger time frame or moving average points. Here, my chart looks really clean because I'm using my wrinkle bars at 20 ticks a bar, right? So it's pretty large time frame for wrinkle bars, right? But it gives me an overall view of the feel and movement of the market. Whereas if I use a shorter time frame, I'm using it more for scalping than I am for, I guess you could say, swing trading when I'm trying to take the big moves. Scalping, you can take a lot of little moves and you can give you big results, right? But here it is a larger time frame. And let's eyeball it, right? Let's eyeball it. Let's look at this. Let's omit little movements, something like this, okay? Let's omit those. Those are minor corrections in the market. You can see them here. Minor corrections. We omit all those. Let's not pay attention to those for this instruction period, okay? Because I want you to get this stuff. Let's look at the Elliott wave. The Elliott wave is no more than a wave. No matter, it all depending on the direction of the market. Okay, that's all we're looking for. So let's look at the wave. All right. So this will be considered our A leg, B leg, right, and C leg. Okay. Hopefully we can trade A, but if we can't, that's okay. Wait for B to finish and then we'll trade C. Okay, and I'll tell you the rules of the game. Once we establish A in the beginning of B and the end of B, the end of B should not be A. All right, and then when we're looking at C leg, C leg will always be the end or beginning of the end of the A leg. Okay, so our C leg should come past the A leg. All right, so let's look at that again. A, B, C. Let's look at this point. You see how C actually went past A and B could not beat A? That's exactly what the Elliott wave is. Now, when we throw the Fibonacci in, you probably heard that term before. Fibonacci is going to give you the scientific data points to say we are truly in these particular wave movements, right? So let's bring this out. We'll go to the top of this highest point down to this lowest point, right? When we actually the beginning of B. And Fibonacci describes it saying that the correction point sometimes is 38.2, 50%, or 61.8. Now, don't look at it. It has to hit that particular point for the correction to be true. Look at it as a range. That's going to bring you the most success. Don't look at it. It has to hit those numbers before it turn around. No, look at it in a range. Let's look at it today. We did it today in today's trade room and was able to make some pretty good profit today. But let's look at here. You see how that correction of that pivot point happened right in at 51 to 61%, letting us know that C is about to start. Okay, we went a little sideways here in the market today. Let me point that out to you. We went a little sideways, but we're still in the downward trend. The red is on top of my what I call the trend spectrum. Another indicator set that I've created. Um, it still says that we're in a downtrend. You would have experienced a little heat today, but at the end of the day, it would have been pretty profitable for you if you would have stayed with it. Okay, and this is just identifying true uh, Fibonacci points. So again, we take A to the beginning of B, right? That's the A leg. This is the B. And it came into our point before it did this pivot or change of direction, and we trade C. Again, we're talking about 800, just trading this leg alone with one contract, 800 to $900 worth of profit in the course of probably 1 hour and probably I think about 20 minutes. That movement lasted. So again, keep trading simple, easy, very Barney, and you can make a lot of money in trading. Okay. Now, and that's just kind of explain to you what the Elliott wave or the Fibonacci line is. Okay, you can see it on the shorter time frame. I can, or price action movement. I can show you that too. Um, Here we go. Look at this. We can see it here. Look at this. Short time frame. Elliott wave. All right. A, B, C. Same rules apply. If I throw the Fibonacci on here, this is for scalpers that don't want to be in the market for a long period of time. You can take your profits right away. I think C was somewhere around about a $300 move. Okay. But let's look at that. Let's throw Fibonacci on there so you can see the scientific data points as described on the larger time frame and see what we got. Fibonacci. Let's use this right here. This is the true pivot point. All right, good. Look at this. What a coincidence. Let's do this. Remember I told you about that range for that pivot point that we look for? It happened in between that 50 and that 61%, right? That's what B pivot at. So we look at this again, and it's what? Just like we just described with the Elliott wave, A, B, and then C. Again, C was somewhere around about $300 approximately in the course of probably 10 minutes. Okay, so scalpers can really do some damage here if they use it right. But it's good to kind of get the whole trend of the market before you try to make scalper moves too. You want to make sure you're using the Elliott wave in the right direction. Okay, so again, that's Elliott wave and the infamous Fibonacci lines. All right, 4 points. Make trading really Barney. Make it really easy and very, very profitable. All right, thank you. Have a good day.